Good evening, everybody. It's Wednesday, April 17th, here at PreciseAlgorithmTrading.com. Happy birthday, Greg. Let's talk about the markets. So, some stuff is happening, and I want to get into that. We had a change of character today that I think we need to take pretty good note of. Sorry about that. So let's dive in here. Our automated trading. This is a little back and forth on our Dow futures, and we had two trades today, so no big deal. The Russell today went down a little bit, and so two trades in a day. I won't say it's totally uncharacteristic, but this thing doesn't trade near as much as the other ones. And then the NASDAQ actually had a decent little day. It's trying to get itself back up and going, or it sure feels that way. Now that volatility is kicked in, I think we're going to see these things work better. Um, so here on the 17th, there are a lot of trades and a couple good ones there in the middle. So that is pretty productive compared to where it was. So we've had some decent, like I say, that is starting to come out back up. It appears so. All right. The markets themselves. Let me jump to the kicker, which is this big BPNYA, the bullish percent index of the New York average. I didn't think this thing would flip this fast, but it has. In the last few days, it's gone down quite a bit. So we've seen a 3 box reversal. And the reason I'm calling this out, this is not obviously our website, and we've talked about that before. This is not their indicator either. True Market Insiders. This thing's been around. It comes from investorsintelligence.com. You can pay for a service. True Market Insiders has a deal with them where they can post just this one chart every night after the market. This does not show any change during the day. It gets calculated after the market. But this is in my opinion, the big indicator. And I was talking about it the other night. They've written books about it, and basically now the timing on this is weeks to months. And if it just flipped, we can expect this thing to be in a column of O's for a period of weeks to months. And you can't have a flash crash. You can't have a market meltdown without this thing being in a column of O's. So there you go. That's really the punchline, is that now we can have a flash crash or a market meltdown. We had Brexit, we had 9/11, we had I can't remember all of the different events, but they're all, like I say, they're written about. And um, the housing market crash in 2008. This preceded all of those, which is creepy and very interesting. So I'm not saying we're in for that, because this thing plenty of times rolls over, rolls back up again. It also rolled over in 2020 when I think it was this big one here, when the pandemic hit. And this was rolling over and doing all of that while people were trying to figure out what the pandemic was all about. So that's one in recent history but it's not, probably not even in that book unless they put it back out again. And you might be wondering what book I'm talking about, and off the top of my head, I can't remember what it is. But if you look up point and figure charting in Amazon, there are books about it. And anyways, I don't want to belabor that too much, but this is a big deal. This thing rolled over. we'll come back to stockcharts.com. Again, that I'm not saying that like that we're going to get a flash crash, especially since this thing's already rolled over this much. So the next thing is in my actual, and I've talked about this, I actually think we're in for a rally now. And the fact that the other thing rolled over, I think we're even more in for a rally. And you can actually see over here on the hourly chart, this is the S&P 500. You can see on the hourly chart that we were going down at, I wonder if I can make this thing. Enter mark mode. Oh, of course. Yeah, that thing, I was using it for a few days. We'll use this instead. So we were coming down at this angle, and now we've accelerated to that angle. And I hope you can see that. So it actually shows up here on the daily chart as well, where it's accelerating to the downside. Well, that's not much different than when you're going along up in an upward slope, and then you get one of these, and it's called a blow off top. I'm not saying this is a blow off yet because it's not done, but I think what we're in for is this. Somewhere down here it's going to pivot. We're going to see a hammer kind of market action in a day. We'll see a tail and then a close higher, and then we'll go up from there. I'm going to give you caution though when we go up from there. I'm actually expecting it to roll back over again. Now here, the stochastics has come all the way down, and it's turning green right now, and I wouldn't read too much into that yet. But you can see that the parabolic SAR dots have come all the way down here, and they're getting tight up against price, and when this thing comes back up, it's going to take those out. You're going to get new parabolic SAR dots to the downside, and that's going to show I'll call it potential for a rally, but that's what it takes to get a rally going. Those have to flip. This can go back up again, and where it stops no one knows, except it'll stop. It'll get resistance at that line, that white line right there. It'll get resistance at that yellow line. It'll get resistance at all these lines. These lines will have come down by then. And so what I'm expecting now is we've come down, we come up, we came down. I'm expecting to come back up and roll back over again. Then the question is going to be, do we put in a higher low and go back up and break this trend line that I've got drawn on here? Or do we come down, come up, come down, come up, come down, break through, come back up? You know, anything after that is, we could come up, we could go back down. What we're going to be looking for is a break in polarity before this thing can really rally again. So there's more than that. We're going to look at the stockcharts.com bullish percent indexes, and if we start to see healing in there, we can trade those on a short-term basis along with price action and polarity. So you put all that together and you can get a winning trading system. Now there's going to be a lot more volatility going forward, it appears. Now at the same time, I probably should have done this before I turned that tool off. Let's turn it back on again. We can have a box of price action for a long time. We've seen it before in certain charts. Let me get one. There's one that's been driving me crazy. So a box of price action can look like that, and that's really mostly sideways action. So and we don't need the forecast. We don't really need to look ahead at what we think is going to happen. although we've got the parabolic dots, those help us with direction. We've got the weekly dots, which are now flipped to the upside along with the daily. That helps us with direction. We've got the 30 period moving average, which is our trend, and now it's red. So literally pushing up into this zone is an opportunity to short. I don't particularly short stock. I don't like to. I think it's a difficult thing because there's a whole lot of rules around shorting stock. But buying puts is a whole different animal, and we can get into that. It's puts and calls that they're. Um, I'll just leave it at puts are the easier way to trade, and they're also limited risk. They're easier ways to trade the to the downside, in my opinion. In fact, let's look at one. And you might think I'm nuts for going short Goldman Sachs. And yeah, this thing has been in an uptrend, and it's got a buy signal on the 30 period moving average. It may very well be a losing trade. However, I have overhead resistance of the parabolic SAR dots, and I have overhead resistance of the weekly parabolic SAR dots. So I'm willing to take that risk, and in this particular case, I thought I got rid of all this junk. Bear with me. I have a risk of $3,210 maximum on this trade for unlimited gain. Literally, if this thing was to go to $370 from where it is right now, $403 to $370, and let's look at that on a chart. Down to here. This $3,200 risk position would go to $23,000. That's pretty good risk to reward, and I'm not saying it's going to work, but here's ARKK. It is working in the same way. Now, Goldman Sachs is one of the biggest financial institutions that there are, so going against them is a little bit nuts. I'll give you that. In this case, let's look at this. Same kind of thing. I risked $754, and right now I'm up 450 or so. 470. Pick a number. So it's the same thing, and if this thing goes all the way, these are expected moves, by the way, from where it is now. If let's act like this thing goes to 40, it'll be up 739, and let's look at that on a chart. That's down to there. So really not that much farther, although we're outside of the bands, which I believe I used to have 3 of these on, and now I've only got 1 on. And so I've already taken some profits to the downside, if that makes sense. APA. This is exactly what I'm talking about with the markets. Looking at, we were coming down, came up into this resistance area, all this noise up here that was going to be in resistance, and it flipped dots right there. It actually came up the next day and opened right here, and that's when I got in, and it's been going lower ever since. And if we look at that on an analyzer tab, it's a risk of $580, and now it's up $193. Is that a great thing? No, other than I believe, again, I had 3 of them on, and now I have 1 of them on, because once it starts to hit these bottom lines down here, I take them off for profit and then let one run. We're all the way down here on the stochastics as well, and That's how you play the market short. Now, I haven't dealt with a lot of the market being short because it's been so bullish lately, but basically, you can either go to cash and sit on the sidelines through these terrible, I shouldn't call them terrible times. They're not good times for the overall market. They're harder times to trade, but there will be trading opportunities to the long side. So, but there's other ways to be able to participate to the short side. I will tell you the market is um, skewed. The stock market is skewed for stocks, and at least that's my opinion, and that's an opinion that's shared with a lot of people. Um, they're biased towards stocks. All the mutual funds, all the exchange traded funds, they're all made up of stocks, and all the hedge funds and especially the big funds, they're they have rules to where they can't just get out of everything, and a lot of them can't park in cash. They actually have to stay invested. So that's where sector rotation comes from, and they'll move from precious metals into consumer discretionary, or from consumer discretionary into energy, and so forth and so on, into financials and all the other things. So some of the trick is to figure out what they're rotating into and ride that. And I use my sector finder. Let me find it. Sector watch to do that. So, not all of these are sectors, but most of them are, and all these XLEs and XL, the ones that start with X at the bottom, are the actual sectors. You can literally go through them sector by sector and see which sectors are leading. These are right now pulled back hard. That's energy. That's we've looked at this during while oil was rising. Now oil is falling, by the way. Financials. Goldman Sachs is, I believe, a financial firm, technically, when you look at which sector it belongs to. These are industrials. I thought so. I just wanted to double check. The industrials are actually leading as far as strength goes, it looks like. This is technology. We know technology has rolled over lately. XLP, consumer staples, products that you need, that you have to buy regardless of what the economy is doing. Real estate. I don't think it's technically a sector. They added it into the Spider products a few years ago, but I like to use it as a sector. And you can see real estate's actually falling over right now as a sector. And polarity is to the downside, at least in the short run, although that momentum wave right there and this unwinding could be an opportunity going into the future. We just got to watch for all of our signals to line up. Utilities. This is an interesting one. When the regular stock markets get weak, utilities usually pick up. And looky there, it's picking up. It's not, in my opinion, tradable right now, and it's also had a impulse wave rally that's gone with the rest of the market. It's just not near as strong, and now it's in a position where we could get some breakouts over the recent highs. These things have been coming down for a while, and they look like they're trying to heal. XLV is healthcare. Looks like healthcare is in the toilet as well. XLY is consumer discretionary. And if you want to, get on Yahoo Finance and look up what all those different sectors mean, You can even look up what kind of stocks are in them. I use it as a kind of like I take it with a grain of salt a little bit, but I am aware of them, so that you don't try to get too diversified or not too concentrated in any one sector at any given time. The interesting thing about them is some of the stocks actually are in multiple sectors. And I think an example of that is Apple. I think Apple is in the Dow Jones Industrials and it's in the tech sector. I wouldn't swear to that because I haven't looked them up in a long time, but certain stocks like that, there's 30 stocks in the Dow, and they're 30 of the most popular stocks. And I believe you have things like Apple are in the Dow. I think it still is anyway. I can't imagine it's not. Alright, so I know I spent a lot of time on that, but I wanted to, for the sake of people freaking out when the markets are down like this. And again, these are the times where you basically you either know what you're doing, you take great signals, and you still might get run over, and then eventually this thing all rolls back, and that's when your next real opportunity is. Unless you're a great short player, and there are some where this type of a market is what you've been pining for a while, and this market back here, and if people are perma bulls or perma bears, they hate a bullish market like that. I happen to prefer it. All right. Anyway, let's look at the total things today. The S&P ended up going down 0.58%. The Dow Jones Industrials went down 0.12%. They were actually looking pretty strong out of the gate this morning. I am still expecting a bounce here, and I'm expecting that to come up into the mean, which will probably be around the 30-period moving average. You never know exactly where it's going to roll back over again, but you can get some pretty good cues off of the hourly chart, because it has to happen on the hourly chart before it can really unravel onto the daily chart. The Russell went down 19 points. Or 0.99%. The NASDAQ went down 181 or 1.15%. So another thing, if you're in mutual funds and you want to move to cash, this is not the time to do it. The time to do it is when it rallies. You get that rally, and typically you might be able to see this stochastic come all the way back up into the upper reversal zone or into the middle and then roll over. And then that's a chance to get back a little bit of the cash that this thing's given up in this pullback. And then you can set aside until the bullish percent indexes roll back up again. You can go in safely. All right. There's your Russell. There's your NASDAQ. Looks like it's probably going to get a snapback rally here because it's gone pretty well past its lower Keltner channel. Bonds, they're going to bounce and they're going to look better against the market in a lot of cases, but this is not a bullish pattern. And oil went down pretty hard today. That's not to say this thing can't roll back up and continue higher, because it can, especially since the trend is up. When the trend rolls over to red, I would think otherwise, but right now you got the parabolic dots in the bearish position, so rolling back up out of here will be if it's going to continue higher, it's got to take out the parabolic SAR dots, and again, it's got to take them out on the hourly first. All right, last but not least, let's go here. Yeah, let's look at before we get out of there, the VIX, it came back inside the Bollinger Bands. If you go back in history, when it comes outside of the Bollinger Bands, it does still rock and roll up in here for a while and mess with everybody. That's what it's doing today. But it is notable that it came back inside the Bollinger Bands yesterday. So this is where I'm expecting that snapback rally to come from. And this thing probably will come back to the mean as well, which gives it a pretty good opportunity for the market to rally back out of this a little bit. Let's put this back on. Right, to get back out of this and give back some profits to especially the buy and hold guys before this thing rolls over again. And you know, I'm again, that bullish percent index is weeks to months. You know, it could literally roll back up inside of a week, or sorry, a couple weeks, and everything could just get healed and go again. Most of the time it doesn't work like that, but that's why we're going to use this. And we'll be watching, to give you some insight here that sometimes I don't talk about, but I usually go industrials, NYA, transports, NASDAQ to SPX, and then the last things I look at are OEX and NDX. The reason being is it's kind of like a broader to a narrower view. The industrials are pretty broad, the NYA is very broad, transportation is pretty broad, the NASDAQ is not as broad as the NYA, but it's broader than the others, and then the S&P is 500 stocks, and then these two that are 100 stocks of their different of the S&P and of the NASDAQ. So when you see stuff happening on the OEX and the NDX, that's usually followed by the bigger index. So it works the same way. We can look at the OEX and the NDX on the stock charts as well, which I guess I've never really done with you guys, but it's similar, and that's why I do it the way I do it. So let's look at the industrials. Tacked on 2 new O's, went down 6.25%, and at this point I could see us hammer out a bottom, get into a capitulation type move, and maybe even see this line like we did on the whichever one it got down to. We're gonna have to look at that. So let's look at the NYA again here. Minus 1.44%. Transports 3 boxes to the downside, minus 9%. 50% of the stocks in the transportation index are on a point and figure buy signal. That's what that means. The NASDAQ tax on a new O went down 3.27%. Still on a point and figure buy signal, by the way. That is something to take note and keep in the back of our minds. The S&P 500 went down 1.92%. The OEX tax on a new O and down 3.57%. And the NDX, that's the one that came down and broke through its support line. 2 new O's, minus 10.81%. Next stop would be somewhere, I'm going to draw this in so you all can see it. This level is a sort of, I'm going to say, support, because it's close here, 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 and we're almost there. So you draw a line through there and you say, well, that's about the next place where it should stop. Now, there's no guarantee because it didn't stop there. However, it just had dealt with, within the last few months before that, this, which got all the way down to 12. This indicator can only go from 0 to 100. So when you get a reading that's that low, unless, I'm not even going to say, was going to say, unless the world falls apart and like the stock market goes away, but that's not going to happen. When things get down like this, you need to be looking for a reversal and looking for opportunities, because that type of a move right there can make a lot of money. So anyways, so I'm looking for that to be a support level, and then if it gets broken, we'll see what happens next. And that, I hope, helps anybody that's watching. And if you have questions, drop us a line at precisealgorithmtrading@gmail.com. Until next time, hold on tight and good luck in the markets.